Yo, what's going on, everyone? Hope everyone has been doing fantastic. We are back with these YouTube videos. I was away for a hot minute traveling the world. I'm now settled down and we are going to be getting back to these weekly YouTube videos. Also, please excuse me if I do sound a little stuffy. I have been recovering from the flu. So without any further ado, let's get right into it. Now, starting off with the macro, if you have been following me on social media, I do these small periodic updates on X. I mentioned that my view towards the move off of the lows has not really changed, but my only thing that has changed since our last video is in the sense that we shouldn't be forcing an impulse off of the lows, meaning that the moves off of the lows looks more corrective than impulsive. We also saw that this move was originally some kind of expanded flat where we could have said that this has terminated as a wave 1, 2 here, and we could be working for a possible wave 3. That is still being monitored. It's not entirely invalidated, but this wave C for this internal expanded flat just seems better fitted as an ABC correction. So with that being said, this whole move here is now starting to turn into a different pattern in itself. And remember, in Elliott Wave fashion, we are only working with 3s and 5s. In this case, this move here looks like a solid three-way move, and the only mode of correction pattern going forward I can see is a possible diagonal with the current time of recording where this low has been protected for a wave 4. So in order to achieve this bullish outlook on the macro where this wave 4 has terminated, again, this hasn't changed for me personally. I still believe that if we have these lows protected, then we have to continue working with the bullish narrative, which I am doing now. It's been a very frustrating month for the bears in the sense that they have been looking for a continued move to the downside, but these bounces have been emotionally dreadful because they have started to reappear as bullish. Similarly, these corrections have been dreadful for the bulls because they also start to look bearish once you start reaching major Fibonacci levels. Remember, when we're looking on the macro, as long as you are able to identify 3s and 5s, you can still kind of catch yourself and, say that you may be working in a corrective pattern or some kind of impulsive move to the downside. When this move off the lows, although this move did look impulsive eventually, it did come up with the bounce, breaking these highs and lows over here. So if that's the case and we're working with some kind of bullish mode of pattern, again, the only mode of pattern that I can see going forward with the current structure is this narrowed down idea without being complicated too much. We're looking for the possibility of another diagonal variation being created. It is still being monitored again due to the fact that the moves are corrective. Remember, the diagonal pattern in itself is constructed in hierarchy fashion as a 5-wave motive pattern going into a wave 1, not as an impulsive move of a 5-way move, but correctively within the subwaves in itself for this diagonal pattern, which is going to be as simple zigzags or corrective zigzags in a complex manner, meaning that we can be working with WXYs, double zigzags, and so forth, and we could be working more. Likely, we want to be looking for simple zigzags as they do have better distribution tendencies and outlooks. So with that being said, we do have only waves 1 and 2 being created, so it is quite early to call for a diagonal. However, since the move off of the lows is corrective and this move here down was corrective in itself, we're now resorted back to the diagonal idea in itself. So we're looking for a totality of 5 waves. We're still working for the wave 3 of the diagonal in itself, but again, remember, we're working for corrective moves to the upside with the tendency of an eventual overlap for this subwave 4 going into the territory of wave 1. Now remember, that doesn't have to happen with the new rules and guidelines, but it is a tendency, so we are going to be looking for that, as that does help solidify the diagonal pattern in itself and the contracting variation as best as it can. Going into the eventual respectable wave 1 of the primary degree, we're going to be looking for another wave 2 pullback, hopefully in a corrective and controlled pullback. Then we'll be looking for a wave 3 to the upside. I've also been getting DMs on the idea of how we can be possibly working within a triangle in itself, where we do have this as a WXY where we still have a projected low, and we may be working for some kind of WXY where this Y of Y is a triangle in itself, as that is now pretty much the only resorted pattern. I do believe that we don't want to be trying to force any sideways patterns, as it is starting to look quite long in time. Although it is still valid, I would refrain from using those ideas as there are better alternatives, as I think that the general markets don't see termination points as we do as Elliotticians, meaning that right now this move here does look very nicely as a possible three-way move in itself, where it terminated entirely here. And the general markets are looking at this rather as a possible extreme low, extreme high. That is about it. They don't see triangles at the end of a corrective pattern. Rather, I think they see the markets as a corrective triangle pattern in the entirety of the actual distribution phase, rather than seeing it some kind of happening at the end of a possible phase here of a wave Y. So that's just my personal opinion. I think we should be approaching the markets where how the general markets are seeing the markets, and then we apply the wave theory on top of that. And then we don't want to be overcomplicating. Thirdly, the markets don't see how we as Elliotticians trade the markets. So that is why there's a lot of subjectivity being attached to these market ideas and patterns in itself. So right now, I do believe that this move here, again, even the diagonal in itself, Elliott himself didn't even see these diagonal patterns. It's just more of throughout the years, the more tendencies and observations being built eventually became a pattern in itself. So this wave 1-2 eventually is what we're going to be looking for. We're still monitoring it. It's still quite early to talk about how this diagonal is going to be completed or not. As long as this top here breaks, then that gives us far more confidence and the ability to identify a further continuation for this diagonal. So that's that. Our second idea for the bullish continuation is, instead of us having a possible WXY sideways pattern, maybe there is one chance that we do break these lows and we do get supported at the next Fibonacci level at the 50%. It's not a major golden Fibonacci level, but for a wave 4 tendency to land at the 50% in between the 38.2% is also a possibility, since we did only reach, and at this point we should say that 38.2% has been hit if we're seeing this as a macro wave 4 bottom. But again, I don't see it being supported again as a double bottom and then we reverse. I'd rather just say that we come down into the territory of the 50% in between the 38.2%. So if that's the case, the only next kind of possible idea that I can see going forward is a WXY, and then we have a continuation of a few more corrective patterns as an XZ, which gives us a WXYXZ pattern. So these are extremely rare in itself. I'm not sure if I want to be saying this or solidifying this idea going forward, but it is something to be considering. But we don't really have any good channeling perspective within this idea. We are seeing too many higher lows, too many lower lows, too many lower highs being created. It just makes it too much of a mess. I'd rather see this as the end of something or the beginning of something, which I will be going into in a sec for a bearish idea. But again, this idea does kind of fit into the idea of each distribution pattern being respected in terms of time, where we do have 5 solid kind of distribution phases, and this last leg for this wave Z of the primary degree in yellow could be finished as an ABC, because it does help us kind of remove a lot of the inconsistencies within the internal counts, where we can still keep a lot of the nice looking internal counts without forcing it too much, where we can still keep a lot of the 3-wave moves intact. And if that's the case, then we can say that this here was the finishing move, and this now can be completing as a possible ABC to the downside. But again, remember, this here does look like a 3-wave move. It is a bit difficult to count 5 waves in here. But if that's the case, we're still working for this wave B. And again, this is already close to being invalidated above this wave X of the primary degree. So this is still being monitored. I'm not sure if this low is going to be coming in, but the only real pro to this idea is that we do have the possibility of retesting the 50% level, and at that point we might as well be bearish, right? So that gives us into the idea of going into a bearish idea, and I would assume at that point people would be bearish. This idea is also coming into play, where we could have a few ways of looking how a wave 1-2 has terminated here. In my opinion, I just like to see this as a possible rare expanded idea, expanded variation rather, as a leading expanding variation, meaning that we have 1, 2, 3, 4, 5, and then we have this as a completed terminated whole distribution phase, and the rest of the quarter 4 is going to be a distribution or transitional wave for a possible wave 2. Now this meaning that this is going to be the bottom of a wave 1, and we're now going to be working for a distribution phase where we don't come back to the all-time highs. Maybe it can still be validated if we're still working for a wave 2 to the upside here. Just really needs to be dependent on how this transitional wave is going to be created internally. But again, this idea could be working with the idea with this B wave is now being currently worked on, and that in itself is going to be the whole rest of the year as a distribution phase. And again, it wouldn't be too surprising if we did some kind of sideways movement, because this whole move here was a sideways movement in itself. So this whole year could be just a year of either a distribution for a move to the upside or to the downside. So again, I think that this wave 1, 2 is going to be also in play here. Again, we can have this as an internal expanded flat where this wave 1 and 2 is here, and this is a 1, 2, and this move here is now already starting to look messy if you're starting to nest these 1, 2 ideas into consideration. So I just like to see these macro outlooks a little bit more in simplistic outcomes. So if that's the case, even though the rarity of this expanded flat idea does exist, it's only by theory that it is rare. But again, these observations have been observed enough that I do think that if we see how the markets see the markets, then we can see this as a possible distribution phase. And the narrative is also kind of being built upon that idea as well, where the markets aren't interested in buying these dips, only in the dips and also the resistances in terms of shorting and longing opportunities. They aren't looking for long-term opportunities, but rather they're looking for adding to their positions or DCAing or dollar cost averaging into their positions for shorts. And also similarly for the bulls, kind of dollar cost averaging at major levels rather than at these internal neutral zones. Now, this idea does kind of fit into the RSI as well. We're still fitting in the neutral idea, and that idea also could be continuing for the rest of the year. And this wave 1, 2 could be just a larger continuation for this wave 3 to the downside, where we don't even come and just get supported like a lot of people are saying that we'll be supported here one more time. I think we will be met with one more larger move to the downside, and the internal structures is what's going to be supported by this next distribution zone, rather than just building us up for a larger narrative move to the downside for a wave 3 that is going to be fitting us up for a possible C wave of a larger expanded flat idea. But again, that idea on the macro is quite rare. It's too rare for me to say that this idea is going to be playing out, but it is starting to build up in terms of the narrative, in terms of how it's been distributing. It's very, very dreadful for a lot of the bulls and bears. But again, if I had to pick one side, I would still choose the option of an idea that we have to continue with building continuous new ideas on this continuation for a bullish narrative to the upside, because it is still corrective, but also still impulsive, or still working for a possible wave 1 to the upside. We just don't know how this wave 1 is going to be terminated, because we do have a protected low, and that in itself, a protected low, is incredibly important for the bulls going forward to continue this move to the upside. And I do still think that there is a very, very good chance, based on alternations, based on the rules and guidelines of how an overall look for an impulsive structure to the upside is playing out for the bulls, in terms of how we've been continuing the narrative of a possible wave 1, 2 as a flat idea, and this move here is a completed move as an ABC. This wave has been completed with alternation in mind at the 38.2% level. We're just looking for how this wave 1 is going to be created, and we're going to be looking for this similar structure going forward in Elliott Wave fashion for a wave 5 of the higher degree. It all will come more clear as we go forward. Again, this wave 1, 2, 3, 4 is just how I currently see the markets. I know as we continue dip to the downside, a lot of people are saying that this is the end of something, which is possible, because we do have that idea of the bearish idea, like I said, where this move here is a corrective move and this here is a corrective move, but it's just far too rare in my opinion. So hopefully that was helpful, ladies and gentlemen. The smaller time frame updates will be updated on Discord and also on Patreon. So if you're very interested, please do not hesitate. The link is in the description below. I'll see you guys in the next video. Thank you. Bye-bye.